Welcome to today's market report.
September kicked off on a stormy note on Thursday as persistent worries about rising global interest rates and recessions haunted stocks, bonds, and oil prices, and vaulted the US dollar to a 24-year high against the yen. Indeed, data released early Thursday that showed US manufacturing grew steadily in August as employment and new orders rebounded was not welcomed by investors, who worried a strong economy strengthens the case for Federal Reserve to keep raising interest rates in the next few months. Investors fear that continued monetary policy tightening by central banks in the United States and Europe would scupper the two regional economies and trigger a recession. The US data this week has suggested the Fed still has a lot of work to do to reduce demand sufficiently to bring inflation down. All eyes are now on US August non-farm payroll data due on Friday. Analysts expect 285,000 jobs were added last month, while unemployment rates hovered at 3.5%. Investors may not like a strong number if it supports the basis for a continuation of aggressive rate hikes, which could further boost the US dollar. After dropping over 8% earlier in the day, US stocks reversed by the end of the session to eke out modest gains. The US S&P 500 index climbed 0.3%, Dow Jones rose 0.5%, while the Nasdaq finished down 0.3%. Europe's stocks share index of 600 companies slid 1.8%, and MSCI's main world stocks index lost 0.8% to stand at its lowest since mid-July, while Europe's government bonds markets saw more selling after their worst monthly rout in decades. The bearishness was being fed by the possibility that the European Central Bank will raise its policy rate by a record 75 basis points next week, following Wednesday's record high inflation reading. A stronger US dollar pushed GBP/USD to levels under 1.15 for the first time since March 2020. The greenback is rising sharply following upbeat US economic data.
This is today's market news. Thanks for listening. We'll see you next time.